Hello and welcome to another update video about MATIC. MATIC, did continue to push a little bit higher to the next fib level there around $1.15. Not unusual upside extensions at the moment, and the structure pretty much remains unchanged. It remains quite a healthy structure here that we have on the MATIC chart. Quickly, if we zoom out a little bit to the 4-hour time frame, well, first of all, I'd like to explain the structure to you. Explain to you the relevant parameters that we need to be watching here. So we have a 5-wave move up between, well, the 11th of September sort of and the, end of December highs. So 5 waves up, then a 3-wave pullback in wave 2. The third wave to the upside, would take us to around about $2.41, ideally, as a first target. Can always go higher, okay? Extensions can always happen, especially in third waves. Then we should get a wave 4 and a wave 5 still. So all of that is a bullish roadmap here that should take us to, well, in this fifth wave to sort of, well, $3 and beyond, okay? I don't want to give maximum targets. Overall bull market projection points to around about $10, but we are too far away from that to already determine exactly how we should get there. But first of all, let's see if these 5 waves can fill in. That's already a decent distance that's to be traveled. Then if we assume that we are now in this larger third wave, $2.41 plus, obviously it would be ideal if 5 waves can form, like a wave 1, a wave 2, a wave 3, a wave 4, and 5. I only have the 3 of 3 here on the chart. Oops. To keep it simple. Okay, so this third of a third wave should, based on what we can see right now, reach round about $1.71 as a first milestone target, possibly even higher. Before that happens, ideally, we would get another wave 2 pullback before this third of a third wave starts. However, I've mentioned it many times before, and we are likely in this third wave, in this larger third wave, and it takes the right mindset and strategy to trade and to be in a third wave. In a third wave, I mean, we've had really throughout the bear market in recent months, we had a lot of deep pullbacks. At some point, the market will not offer these deep pullbacks any longer. All right, we see that potential currently unfold on the ETH chart. ETH might just go directly. Okay, we might just see direct upside extensions on the ETH chart without any deeper pullbacks. That could happen for MATIC as well. I share with you this here because it's an ideal structure, but there are certain levels, markers of sentiment basically, that's basically what these Fibonacci levels are. If they cross, then we can stop looking for this wave 2 pullback. I only have it on the chart as a potential, this support area, but it doesn't mean that this wave 2 has to happen. It might have happened already here as maybe this initial one too, okay? We are in a third wave and possibly already in a third of a third wave rally. Therefore, it is usually useful in a third wave not to use, basically get too small with positions, because it's typically the main element of a third wave that people want to trade, not just the wave 1 of it, okay? And yeah, I mean, this wave 1, this move up could be wave 1 of the larger third wave, and it reached ideal targets. I mean, it could complete here. So maybe some partial profit taking is reasonable, but be aware that there is absolutely no evidence at this stage that this wave 2 has started. So it's only a potential at the moment, but I will take that potential off the chart if the price keeps grinding higher and above $1.29, $1.30. Because a sustained break above the 130 level, here the 78.6 extension, would suggest that we do not get another wave 2. Why? Because this wave 1 would get too long to be reasonable. It would grow too long. I mean, it's not invalid, but it's still, it's likelihoods, okay? Probabilities are shifting. Probabilities are going to shift towards an idea that, okay, we are already in the third of a third wave, and we might only have had a very small 1-2 setup and then have a series of smaller 1-2s here, which make the price go parabolic at some point, right? That's something, it's a very bullish chart. If there is a pullback, it could be another opportunity, not guaranteed. Especially as long as we don't break even the smallest micro supports. So $1.29 is an important marker. If we break above that level, that would be a good indication that we're already in the third of a third wave. Next milestone, then $1.71, $2.12, $2.41. Looking at the 1 hour chart, you see this wave count is technically now full. So it would be the ideal spot to start a pullback. But we really only will know once we see a little bit of evidence, a little bit of price structure, a little bit of a decline, especially a break below $1.03 here, this smaller degree wave 4 low, would be a good indication that this wave 2 has started. Until then, there is no evidence at all, okay, other than choppy price action. It's a bit choppy here, a bit messy. But yeah, it's done what it needs to do. It's a full wave count, but a full wave count doesn't guarantee a pullback. A full wave count only means, I mean, be on the side of caution here. But basically, it's still bullish. Even if we get that dip into the wave 2 support area, the third of a third wave would be expected to happen afterwards, or more directly, actually. Yeah. So that's what I'm watching. Yeah, and basically I'm watching at the moment if the market shows us a dip below $1.03, then we know that it's likely a wave 2 that could find support in the area between 77 and 95 cents with additional support at 89 and 84 cents. But if it keeps grinding higher to $1.17, $1.21, I would first see it as an extension of wave 5 of 1. But as we grind higher through these micro Fibonacci resistance levels, and you see how the market does react to these step by step, you know. But as we grind higher, at some point it will get very likely that we are not going to see that wave 2. And a sustained break above 129 will mean I will take that potential for a deeper wave 2 off the chart. By the way, also, if we break below that wave 4 low, I mean, as long as we're holding the trend line, there's something else. You know, we need to see that break as well to suggest the wave 2 has started. And yeah, while I think, you know, some partial profit taking might be reasonable, it's wise not to thin out the position too much. You know, if you entered down here, for example, I mean, it's still decent profits, but just the long-term potential or medium-term potential is just much higher. And it would be a shame to just sort of get too thin with the position. But eventually, that's a personal decision, right? Depends on personal, you know, risk management and you know, risk appetite as well. That's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.